Hello everyone, I hope you all are doing great and keeping yourself safe. Welcome to your 40s, the decade of the balancing act. By now, you've probably set up your career, your profits have grown, and you're with any luck saving for the future. Can I retire after I need to and hold the way of life I desire? Is there any manner I can lessen my tax liability? What occurs to my own circle of relatives if something occurs to me? Will my coverage plan in reality cowl me for those what ifs? How are you able to make sure you're at the proper tune to attain your economic dreams? First, you want to outline your economic dreams. Retirement is crucial. However, it's now no longer the best crucial economic purpose in your 40s. Financial making plans ought to encompass all components of your economic existence, now no longer simply your long time period retirement dreams. Here are some matters to preserve top of mind. 1. Emergency funds. Big fees pop up without notice, as does dropping a job. Whether it's a fitness issue, steeply priced domestic restore, or your organization downsizing, an emergency fund gives economic balance in what may be a time of chaos. While that is one of the pinnacle economic priorities at any age, a well-stocked emergency fund is specifically vital within the top incomes years. While there may be greater at stake financially and you're accountable for greater humans than in advanced years, there needs to be sufficient within the funds to cowl residing fees for a minimum of 3 to 6 months. Having a cushion that lasts as much as a year is ideal. Keep 3 to 6 months worth of living expenses available in your savings account. This cash allows you to be prepared for an unexpected and will help avoid high interest credit card debt. 71% of Americans do not have 6 months worth of expenses saved in an emergency fund. 2. A debt-free plan. It's not unusual to have schooling loans, automobile loans, a loan, credit score card debt, and different money owed via way of means of age 40. At this point, you need to have a stable economic plan for a way to get rid of that money owed. As you intend a way to construct wealth to your 40s, you need to start to shed credit score card debt, as it has a tendency to have the best hobby rate. Budgeting and converting spending behavior may help you place extra money into debt reduction, so that you can pass via your 40s owing much less and that specialize in different repayments. 3. Save for retirement at 40. You need to work contributing to your retirement plan because you commenced working, whether or not it's a 401k, an IRA, or something similar. If you haven't, there's nevertheless time to trap up with contributions in case you start saving for retirement at 40. Retirement plans have tax blessings and use the strength of compounded hobby to growth retirement financial savings over the lengthy run. If you make a contribution via way of means of traveling to your financial institution department or your organization's HR office, transfer to an automated fund switch from every paycheck into your retirement plan. In that manner, you won't consider it and you could unfold out the funding over the whole year. Staying on track meet future spending needs is vitally important. If you wait too long to save, you may not have the resources to make up for those unfunded years. The earlier you save, the more opportunity you have to earn free money through investment growth or compounding interest. 4. Investing in your 40s outside of non-retirement accounts. It's vital to make investments outdoor of retirement as well. Federal legal guidelines restrict how a good deal you could shop for retirement in tax advantages bills. Once you've maxed that out, or even before, bear in mind making an investment in different funding bills. If you've got kids, install a 529 plan for academic fees. This has tax blessings and advantages from compound growth. Given that university lessons and charges retain to rise, this account makes it much less demanding while it's time to decide university investment options. 5. Estate plan and will. A bevy of files will assist you and your own circle of relatives within the occasion of your demise of incapacitation. The first object you want is a will, which now no longer most effective determines who receives your cash and possessions, however helps you to call a mother or father to your children. Need to you want one. A residing will states your desires for end of lifestyle care, whilst a long-lasting strength strength of legal professional for healthcare helps you to call the individual that will make healthcare selections for you if you couldn't. A long-lasting legal professional for price your named character to deal with your price range. 6. Life insurance. You need to have already got medical health insurance for you and your own circle of relatives. Having lifestyle coverage is a vital part of economic making plans for your 40s. Whether time period or permanent, lifestyle coverage gives a demise advantage in your beneficiaries that may be used for family fees, schooling, loan, and funeral fees. Disability insurance. Disability gives profits with inside the occasion that you're now no longer capable of paintings because of infections or injury. Many agencies offer coverage via paintings, even though you can need expanded insurance or to get your very own in case you paintings for yourself. It's a one-of-a-kind type of protection internet for you and your own circle of relatives. 8. Meet with a financial professional. Whether you've got an economic expert you discuss with regularly, otherwise you simply cross for a one-time consultation, it's useful to get an expert opinion on how excellent to deal with your price range. As you input your top income years and start retirement, having an economic expert to seek advice from approximately making an investment to your 40s is a smart concept. An economic expert will study the massive picture, inclusive of retirement investments, university investments, and different goals, and she can assist piece collectively a holistic plan. If you aren't certain in which to get commenced, take a look at those suggestions on locating the proper economic expert for you. 9. Maximize company benefits. Companies offer advantages including as much as 30% to 40% of a character-based pay. That may encompass matching retirement contributions, lessons reimbursement, tax-advantaged bills for childcare fees and health care, and pre-tax transportation advantages. Find out what your organization gives and take benefit of it as you construct wealth to your 40s. Save for a house. If shopping for a residence make you feel to your economic scenario and location, your 40s are a terrific time to begin getting serious. It's a terrific concept to shop 20% for a down payment. With that amount, you'll keep away from paying personal loan coverage. A further domestic price for some with protects the loan organization in case you default on payments. Those placing 20% down while shopping for a residence should buy this insurance. That's an economic financial saving to you. While that is a protracted listing of factors to do, you should do all of it at once. If you plan to buy a new car, house, or send your children to college, have a savings plan in place. If you don't save for your short-term goals, you'll be required to borrow and pay interest to a bank. These payments plus interest can impair your ability to save for retirement on a monthly basis. When saving for college, your residing state's 529 plan is typically the best option depending on the tax benefits for state residents. However, if you've waited too long to save your child's college education and need to prioritize your saving goals, always remember you can borrow for college, but you can't borrow for retirement. Chances are you're already on course with a lot of those economic steps. However, thinking about this kind of element is a great beginning to constructing wealth in your 40s. Fidelity's research says you should have 6 times your annual salary at age 50, but it depends on your goals. We hope the rest of this guide will help you get closer to understanding and reaching your goals. Everyone's financial situation is different, and many don't have the time, energy, or expertise to manage their financial plans and investments alone. So that's it for today's video. Please watch our playlist on how to make passive income and cryptocurrency if you haven't watched yet, where I explain everything about it. Friends, do not forget to like, share, subscribe to the channel, and press the bell icon and click notification all for more amazing videos. And do leave a comment in the comment section below. I'll be back with some more mind-blowing contents in the next video. Till then, bye.